Yo, what is going on, gang? It's your boy Tank Made Millions, aka Mr. One of a Kind. Today is September 10th, 2021, and it is currently 11:18 a.m. We were in the markets earlier this morning. We actually took a lesson, and with some heavy back testing, a new confirmation checklist has risen, right? And I actually want to walk y'all through how we could have capitalized off of a huge sell opportunity on US 30 using this confirmation checklist. All right, so let's get straight into it. As you can see on the top right, our confirmation checklist consists of 7 different variables, one being market structure. Okay, so let's actually talk about market structure. When it comes to market structure, we're not talking about support and resistance and trend. We're not talking about that. What we're talking about is getting a directional bias of this market, right? So looking in the past, right, we can see that the market here creates a lower high, a lower low, another lower high, a lower low, and then it eventually breaks structure to the upside. Okay, so this right here would have been a clear cut clue that the market wanted to, switch that flow into a bullish market. Right? But if we actually pay closer attention to the signs, we can see that, from this low up to this high, the market creates a low, a higher, a higher low, a higher high, higher low, higher high, higher low, and so on. Right? If we actually pay attention, we can see that this market, right, US 30 actually broke below these previous lows, right? So when the market breaks below these lows, right, it gives us a clue that, okay, this isn't necessarily a bullish market anymore, right? It was giving us signs that it wanted to be a bullish market, but now we're getting, break of structures to the downside. Okay, so that's number one, understanding the flow of the market, understanding market structure so that we understand where to take this trade, right? Number two is going to be liquidity. Okay, first, I definitely do want to talk about, the past again, always looking left to get right. We can see that, you know, previously we had liquidity resting above these highs, right? We had liquidity resting above these highs. And what happened? The market rapidly pushes up and sweeps all this liquidity. So now I can get rid of my little penguin and I can put an X, right? So the market sweeps all of this liquidity and gives us that institutional candle, that last buy before the huge sell-off, which is actually number three. We're going to get to that really soon. Okay, but furthering this analysis, we understand that liquidity lies above highs and lows. Highs lies above highs and below lows, right? So we can see that here, right above these candles here, we have liquidity resting above. Okay, so we have liquidity here, and we actually have liquidity to the downside as well below these equal lows, right? So this is a good target for our selling opportunity, right? So now that we understand what the liquidity is, like I said, it's on to step number three, which is our institutional candle, right? We have this last buying candle before the huge sell-off that sold off with conviction. Okay, it sold off with a purpose. It sold off and it broke multiple structures, right? So I'm gonna just go ahead and highlight that in orange. All right, cool. Right, so we understand that the market eventually has to come back up to this point, right? Now, number four, our Fibonacci. Okay, I understand that a lot of people aren't too familiar with Fibonacci, and just to really break it down really quick, the key levels that I'm looking at on the Fibonacci is my 71% up to my 88.6%. Okay, what these are discounted levels. These are discounted prices in order for our big institutions to sell at a premium price and buy at a discounted price, right? So understand that if the market pushes up into these levels, that is a good indication that, okay, bet we're gonna get ready to sell soon, right? So I have my Fibonacci, right? I understand that my institutional candle lies within my Fibonacci, but now we're not done. Okay, it's time to take it a step further, which is going to be number 5, looking for our imbalance or IPA. Okay, we understand that the market needs to be offered both buyers and sellers, at the same time. So we understand that a rapid movement down, right? We understand that a rapid movement down, like this one right here, right, where there are mostly sellers and not enough buyers, we understand that that is not sufficient. That is not efficient price action, right? So I'm going to go ahead and mark that up for us. We have our imbalance, right? I like gray for my imbalance. And what do we actually see, right? We can see that our imbalance ties, a little bit into our mitigation, our, institutional candle, and it also ties into, our premium Fibonacci levels. Okay. So honestly, I actually have a trade set up here, but we're not done. Right? Of course, we're not done. This is going to lead to, step number 6, which is understanding price, right? Understanding key price levels, those zeros, those 20s, those 50s, right? Those 80s. Okay. So if we actually look here, we have a key level within our imbalance, right? Which is going to be, if I'm not mistaken, it's 35,100, right? We have 35,100 literally right here, right? I'm gonna make that thicker so y'all can see, right? We have 3,500 that lies within this this imbalance, or we can even take it a step further and use 35,120, right? Another key level. Okay, these are all levels that we can use, right? So I really want us to understand that being able to, understand, these levels that the market wants to come to, it's going to be a very, very, very huge thing when trading within these markets. Okay, I won't lie to y'all. So now, understanding price, we're gonna go ahead and move on to time, right? When it comes to understanding time, right, it's just, your trading window. So me personally, my trading window is from, London session to New York session, which is going to be from 3 a.m. Eastern time to 5 p.m. Eastern time, right? So anywhere between that time frame, I'm cool to take the trade, right? So now it just comes time to setting up, this trade, right? Entry is going to be at this key level at 35,120 with my stops right at the high. Okay, I can target the lows here, right, as a TP1, right, and then my TP2 is at my fib extension level, that negative 27%, right? So this is our trade setup here. Now all it is just seeing how it plays out, right? Seeing how incorporating this, confirmation checklist plays out. All right, so let's see. So boom, we can see, oh my God. Oh my God. Right? See, this would have been very, very, very close. Right? This would have been a very, very, very close trade. If you would have set a limit, then, I'm not going to lie, you probably wouldn't have been put into this trade. But as you can see, the market came almost perfectly up to our key level, right? Mitigated into our institutional candle, filled in the imbalance, pushed up into our bank level, right? And it also activated in New York session. Okay, and we understand basic market structure. What happens, right? We have a high, a low, a lower high, and now the new lower low has been created. Right? So this is how you can incorporate this 7-step confirmation checklist to run up the bag. And understand this, The markets are fractal. So you can do this on the 4 hour, the 1 hour, the 30 minute, the 15 minute, down to the 1 minute time frame. Okay. So let's get it, gang. I hope y'all learned something new, right? Remember to, go ahead and show me some love on the gram, right? If you made some money with me, tag me in your stories, do whatever you have to do, right? It really doesn't matter to me, but let's get it, gang. Let's get it.